Assalamu alaikum class. In today's lecture, we will be discussing how dividends are treated on cumulative preferred stock. Now, if you remember from our last lecture, we talked about preferred stock in general and in very detailed form. Now, one specific and popular type of preferred stock is what we call cumulative preferred stock. So, let's start by exploring the concept first. Cumulative preferred stock is a type of preferred stock that includes a provision ensuring that any missed or unpaid dividends must be paid to preferred stockholders before any dividend can be distributed to the common stockholders. So, preference is given basically in case of dividend distribution. So, this means that if a company is unable to pay dividends in any given year, the unpaid dividends accumulate and must be paid in future before common stockholders receive any dividends. So, how we are going to treat the dividends on cumulative preferred stock? For this, three very important points must be remembered. The first and the most simple point is in years when the company is able to pay dividends, obviously cumulative preference shareholders receive their fixed dividends as specified in the terms and condition of the stock. But in the second point, if company does not pay dividend in a given period, say for 1 year or for 2 year or for 3 years, then those dividend goes into arrears. These unpaid dividends accumulated over the time period. And the last and the most important points to remember is that in subsequent profitable years, before any dividend can be paid to common stockholders, the company must pay first all accumulated unpaid dividends to the cumulative preferred stockholders and then remaining to the common stockholder. So this features actually provide more protection to the preferred stockholders and ensuring that they are prioritized for dividends payment because the priority is given to the preferred stockholders first and then any remaining dividend is going to be distributed to the common stockholders. So let's practice for it and I'm sharing Excel sheet with you. We are covering problems from financial and managerial accounting book written by William Zaka Bettner. This book is also known as Meigs Accounting. And the equity, stockholder equity, we are covering stockholder equity chapter, which is chapter 11. And right now you have brief exercise 11.3 in front of you. So let's start. The company has outstanding 100,000 shares of $100 par value. Par value means par value or the face value. Cumulative preferred stock, which has a dividend rate of 6%. So you can see we have just discussed that this 6% is the rate of dividend, and this dividend is fixed. And it is a cumulative preferred stock. So, cumulative preferred stocks means that these stockholders will receive dividend first whenever the company announce dividend payment. The company has not declared any cash dividend on the preferred stock for the last 3 years. The last 3 years the company has not declared. So calculate the amount of dividend in arrears. As we have discussed, we will have to calculate the amount in arrears. So total, first we will calculate the total amount of preferred stock. So total preferred stock is, or directly we can calculate total preferred stock amount of preferred stock is 100,000 shares, and the value of one share is at the rate dollar 100. So the total, you can say, value of the preference uh, or preferred stock is $10 million. And the rate of dividend is 6%. So when we take, I'm solving it step by step for you. So these are the number of shares multiplying by one share rate and multiply by rate of dividends. So rate of dividend is 6%. So total 6 lakh dividend per year. The company accumulated dividend of the company has not paid these dividends for the last 3 years. So total dividend, total unpaid dividends, or total dividends in arrears is total dividend is per year dividend is 600,000 multiply by 3 years. So this is the total dividends in arrears for 3 years dollar amount. So that's it from brief exercise 11.1. And one more thing, they have asked briefly explain how this amount will be known to the investors and creditors who maybe use the company's financial statement. So do remember that the amount of dividends in arrears must be disclosed in the financial statements, but they are not, you can say, formally included as a liability. Why? Because until it is declared by the board of directors. So if it is not written in the problem whether it is declared or not, but a dividend in arrear must be represent or must be presented in the financial statements. So this is the second problem, 11.4. In 11.4, what we have common as well as preferred stock. So both of stock is there, and this is 6% preferred stock. This 6% represent the rate of dividends on preferred stock. So preferred stock total amount is 10,000 shares, and one share is $100 par value. And this is important that this preferred stock is cumulative. Then common stock is 50,000 number of shares, and one share value is $50 par value. The company declares a total dividend of $200,000. So if the dividends are on preferred stocks are 1 year in arrear, in addition to the current year. So this means that uh, uh, dividends on preferred stock are in arrears for 1 year, and we are going to pay the current year dividend to them first before distributing it to the common stockholders. So what is required? How will the total dividend be divided between the common and the preferred stock? So total dividend declared, dividend declared is about $200,000. So first of all, we will deduct, or because the first preference is to give this amount to the preference shareholders and the dividend in arrears. So the dividends in arrears is dividend in arrears, 1 year arrears. So Total preference shares are 10,000. Face value of one share is $100, and the rate of dividend for 1 year is 6%. So this is 60,000. We are going to deduct this amount from the total dividend declared. Then again in the current year, we will first issue dividends to preferred stockholders, and the calculation is same because this represent 1 year dividend. So when we deduct the preference dividend, the total amount, remaining amount is $80,000. So you can say that this $80,000 is going to be distributed to the common stockholder. So you can say this dividends is available to common stockholders, because in very start we have discussed that the priority is given to the preferred stockholders, and if it is a cumulative preferred stockholders, then out of the total dividend declared, we first pay dividends in arrears, whether it is 1 year arrear, 2 year arrears, or 3 years, or so on. So what we did, we first deduct this amount arrears, and then the current year preferred dividend to the preferred stockholders, and this is the remaining amount which is going to be distributed to the common stockholders. So this is from 11.1, 11.4. Let's move toward 11.5. So in 11.5, again, the company has both type of shares. The par value is given regarding common stockholders, and this is 8% preferred stockholder. 8% preferred stockholder means that 8% is the uh, fixed dividend rate. And the par value of the preferred stockholder is, preferred stock is 10, it is $100. So dividends on preferred stock have not been paid for the last 3 years in addition to the current year. In addition to the current year means now there are total 4 years. So these 4 years dividends is still unpaid to the preferred shareholder. 3 years are in arrears and 1 year is the current year. So total 4 years. So if the company pays a total 120, 120 uh, dollars, $20,000, how much will the stockholders receive per share if the stock is non-cumulative? So do remember, in the first requirement, they are talking about non-cumulative preferred stock. Non-cumulative preferred stock means dividends are given in the priority to the preferred stockholder first before giving any dividends to the common stockholders. But the main thing is that as it is non-cumulative, so there will not be any arrears. Like in this case, last 3 years dividends are not paid, so, uh, as the dividend is not cumulative or non-cumulative, then there's no need to pay any dividend in arrears, because this is legally a non-cumulative preference shares. Whereas if it was a preferred share, it was a cumulative preferred share, then the company has to pay these dividend first. So first of all, I'm going to solve it as if it is a non-cumulative. If non, or you can say if preferred stock is non-cumulative. So the dividend distribution would be in this sense that we have total dividends available or total dividends uh, declared. Total amount is $120,000. So total amount of dividend is $120,000. So because we have preference shares, so we are going to pay preferred shareholders first. So less dividends to preferred holders first. So how we are going to calculate the dividends? Now, total preference shares are 10,000. So 10,000 number of shares multiplied by par value. You can see par value is $100. So $100 and then multiply by rate of dividend which is fixed 8%. So 8% is the dividend. So when we deduct this dividend, the remaining amount is available for the common stockholder. So dividends available for common stockholder. So 120,000 minus 80,000. So $40,000 is the remaining amount which is going to be distributed to the common stockholders. But how will your answer differ if the preferred stock is cumulative? So there are total 4 years dividend is required to pay to the preferred stockholders first. So if preferred stock is a cumulative preferred stock, okay, so total dividends declared is the same, that is $120,000, whereas dividends in arrears plus current dividend. So how we are going to calculate total 10,000 number of shares multiply by par value multiply by dividend amount which is 8% and then multiply by how many years? 3 years in arrears in addition to the current year. So we are going to multiply it by 4. So total amount which is due or you can say the dividends in arrears is 3,20,000 or you can say $320,000. So in this case, there isn't any amount left for the common stockholder because this all $120 dollar amount is going to be paid to the preferred stockholders and is still around 200,000 amount is remaining. So in the next year, if company again announce any other dividend, then this 200,000 will be adjusted first. So that's it in the exercise from uh, 11.5 and we will cover one more exercise which is 11.4. So this is also a very important exercise and here we have two type of preferred stock in this situation. One is 9% preferred stock, which is cumulative, and other is 12% preferred stock, which is non-cumulative. So in this problem, we will learn how to calculate um, dividends if we have both type of preferred stock in one problem. So you can see that we have preferred stock 9% cumulative, preferred stock 12% non-cumulative, and common stock $5 par is also given. So total paid in capital is given by adding all three types of stocks. Assume that all the stock were issued on January 1st and that no dividend were paid during the first 2 years of the operation. So first 2 years of the operation, we have not paid any type of dividend, whether preferred or common stock or even cumulative or non-cumulative. So during the third year, the World Corporation paid total cash dividend of $736,000. So the first requirement is to compute the amount of cash dividend paid during the third year to each of the three classes. We have three type of stock. So if for each of the classes, uh, calculation of cash dividend is required. So here it is the requirement number one, cash dividends paid. So total dividend declared is, here we have total amount, which is $736,000. $736,000. Now, as we have discussed, and for cumulative preferred stock, you will have to pay any dividends in arrear. So, 2 years, the company has not paid dividends for the last 2 years. So, in the case of cumulative preference stock, the company is going to pay this cumulative uh, dividends first. So here we have dividends on 9% cumulative preferred stock. And how we are going to calculate it? You can see uh, total amount, outstanding amount is 2,000, or you can say 2 million. So this we have 1 year amount is 9% dividend. So we multiply it by 9%, 2 years in arrears, and 1 year is the current year. So we are going to multiply it by 3 because we are going to pay dividends for 3 years. 2 years arrears and one is the current year. So we will deduct this amount first from this. Then dividends on 12%. Here we have non-cumulative preferred stock. So total amount of preferred stock is $800,000, and we are going to multiply it by 12% because it is a 12%. This 12% represent fixed dividends. So now, uh, as it is a non-cumulative preferred stock, so there's no need to record or pay dividends for the last 2 years, but we are going to pay dividend just for the current year. So you can see it is the this amount, and we have now uh, dividends available for common holders. So how we are going to calculate? Total amount is 7,36,000. We will deduct first 5,40,000, and then we will deduct is $96,000. So the remaining amount for the um, common stockholders is just $100,000. So this is the distribution of total, you can say, total dividend declared. So this is the distribution of amount or the cash dividend to each class of the stock or each type of the stockholders. In part B, compute the dividends paid per share for the third year for each of the three classes of the stock. So dividends per year is required. So here we have already calculated. So in the requirement B, dividends per share is required. We have three classes. So to the preferred or to the cumulative preferred stockholders, total uh, dividend paid is 540,000. Now, total number of shares are 40,000. You can say it is written here, total 40,000 shares is there. So, we divide it by 40,000. So, per share amount is 13.5 per share. In the case of non-cumulative, total dividends issued are $96,000. Divide by number of shares. So 8,000 shares are issued. So divide by 8,000. So it is $12 per share. And in the last case, common stockholders, so total 100,000 dividends are issued. Divide by total number of shares are 400,000. So 400,000. So here it is per share. So these are the uh, per share dividends per shares. What we did was simply uh, divide dividends by the total number of shares. So this was requirement B, and in requirement C, what was the average issue price of each type of preferred stock? So in average issue price, you can say we have three type of shares. You can say here we have 9%. So you can see 50 par, and here non-cumulative, and then we have common stock. So you can see there is no additional paid in capital in the stockholder equity section. So this means that shares are issued at their par value. So in this case, you can say preferred stock, cumulative preferred stock are issued at $50 per share. Non-cumulative are issued at $100 per share, whereas common stock are issued at $5 per share. Because you can see there's no additional paid in capital. Additional paid in capital, or in other words, you can say there's no premium presented in the stockholder equity section of the balance sheet. So the shares must be issued at their par value. Each type of preferred stock. So we have just written common stock also. So that's it from this lecture. Take care, class.